Gramercy advisor, Mohamed El-Erian. He's also the president of Queen's College in Cambridge and a Mets fan, which I feel bad for you. But Mohamed, you have thought for a while, I think, although they did okay. I think they won yesterday, did they not? You have been thinking that the Fed's behind the curve for a while, haven't you? Did you feel better after what you heard last week?
I did not, Joe, and good morning. I did not because while Chair Powell acknowledged two things, one is what's been happening on the ground, including inflation that's persistently higher than what the Fed expected, and secondly, the movement among the FOMC to an earlier taper, he packaged his expectation in a very dovish tone, and the market got it immediately, and Steve just said it. He stressed that we still have a way to go on the employment side. He said as well that there's a very big difference between tapering and rate increases. And what the market concluded is that it's going to be an even slower timetable for taper. And I worry that that's going to be problematic for both the economic well-being and also financial stability.
Do you think that at this point they can say, Delta, I know we're at 5 and change on unemployment, but we're still missing this many. And do you think they can still err on the side of focusing more on employment than price stability, even though every month we seem to see that inflation is certainly outpacing wage gains, which doesn't help the people we're trying to help?
Oh, they certainly can do that, and they can put the greater uncertainty of the Delta variant. The problem with the Delta variant in particular is it is stagflationary. Yes, it depresses demand, or at least the recovery in demand, as Steve rightly said, but it also disrupts the supply chains even more. And we're seeing this in a lot of parts of the world. So, the Delta variant is a double-edged sword when it comes to the Fed's mandate. But yeah, I can see them delay, and the market is already talking, you know what? There's only 3 FOMC meetings left, clearly not September now. November will be tricky, maybe December. And next thing you know, the expectations of the market is that taper won't happen for a while. And this market loves that. It loves the notion that we will continue to inject 120 billion of liquidity.
Steve, I wonder how much of what Mohamed says you agree with. And did you see the Journal piece today that was a political speech to get renominated as Fed chair, Steve, or reappointed? I'm sorry.
I did see it, Joe, and I think it's an interesting time to be Fed Chair Jay Powell right now. Obviously, he has to negotiate a bunch of things. He's got the taper announcement on tap and his reappointment coming. He also has, it seems like 6, 7, 8, maybe Mohamed has a better number, 8 members of his committee who want to move now and think that along the lines of Mohamed, and I guess along the lines that I think, which is that, I'm impressed by Robert Kaplan's argument that it may be doing more harm than good to be adding these asset purchases to the Fed's balance sheet right now. In that, if the problem is a supply problem, and you have plenty of demand in this country, really what you're doing is exacerbating the inflation problem out there. So yeah, I agree with a lot of what Mohamed's saying, and I agree with some of the hawks on the committee that think, you know what, I'm not sure it's doing any good. And it makes sense to reverse policy as a risk management approach to the inflation problem.
Last week I said there's
Shepard Smith here. Thanks for watching CNBC on YouTube.